Hi guys, welcome to a session for your AA Audit and Assurance, where we'll be looking into the Crash Series. Okay, so herein what we are going to do is like there are some people who will be looking into pass the AA. Maybe you have attempted already, maybe you are going to attempt your first time, or maybe you are planning to attempt this Audit and Assurance paper. So this session over a 4-day period is basically looking into how we will be giving you the exam technique to pass this particular exam over there. So there are certain agendas for each day over this 4-day series over here. So we'll be going through that in a short while. Okay, so let's see that. Okay, let's hear it from you guys. The chat box is open, like no relating to audit and assurance. Which area, if you have already attended, which area you feel is like no very tough or you need clarity on? The chat box is open for you guys. You can just type in the areas and we will touch on that particular areas also during this live stream. So let's hear it from you guys. Okay, you can type it in the chat box. What are your difficult areas, or what are the difficulties you are facing when you are attempting questions or when you are trying to learn some concepts? So you guys can put in over here. So hi Deepak. Deepak arrived before me itself in the chat. So right, yes. So any areas you are finding difficult, Deepak? Yes, Srihari is with like no formation of answers. Yes, that is one area where people will be having a problem on. Yes, we will touch on that. No, so there are some core areas where we'll be focusing, and to relating to each core areas, we will be giving you what is the way to form or what is the way to structure that particular answer. We'll give you that exam technique. Yes. Anything else from any of the joinees, like no any other areas you need difficulty in, like you are not able to complete the exam within the given time management issues maybe, or like some topics which you are not comfortable with? Okay, the chat box is open for you. You can type it over there. So in the meanwhile, I will give you about a brief introduction about me for those people who have joined online. Okay, so myself, Mansoor VM, I'm an ACCA member, and I have 8+ years of teaching experience. Sorry, 8+ years of experience from Big Fours. Okay, relating to audit and assurance. Okay, mainly dealing with like no some audit clients from like no from your Middle East. Okay, so now considering the other thing which you need focus here is like no, I have got 12+ years of experience teaching ACCA papers. Okay, and also in CMA US papers over there. Now relating to the papers I am handling presently, I am taking sessions at SOE Global at Chennai. Okay, where I am dealing with AA Audit and Assurance, Financial Management. Okay, Strategic Business Leader SBL paper, SBR Strategic Business Reporting, and AAA will be dealing with Advanced Audit and Assurance. So these all papers I'll take. Along with that, some of the knowledge level and some of the skill level papers. Additionally, also I'll be taking a help. So right now I'll be available at SOE Global Chennai over here. So the chat box seems empty again, like only that problem, like no formation of answers from Sri Hari, right? If I'm pronouncing right. Yes. Anyone else have any kind of difficult areas where you need to focus on? Yes, guys. Awaiting for your response so that we can give out a good session focusing on that particular thing as well, right? Yes. Okay. So the major problem which I face over here, like no, is that like no, there are some areas where we'll be considering, some areas where we'll be considering. Okay, the syllabus. You need to understand the syllabus of this particular topic, particular like no audit and assurance. The syllabus. The syllabus is basically having like no, like we'll be having majorly, I would say F. Yeah, audit risk and response for G1 is a problem. Yes, we are covering that particular area today. Right. So audit framework and regulation is a mere small area. There will be having like no so many things like, but there are small minor areas that has been covered over here, like corporate governance and ethical principles and threats over here. Similarly, okay, the red highlighted thing you can see on the screen on the right side on the C column is basically the topics which might be like no frequently examined during this particular AA exam session over the period. Like no, if you take the past papers, you will see these questions coming in again and again. Now, section B, section C, and section D in your syllabus of AA, like planning and risk assessment, internal control, and audit evidence is a major or core areas that will come in your exam, which will be regularly tested for a majority of marks for you. Majority of marks meaning it could be ranging from like no 14 to 20 marks per that particular section itself. So we can predict the questions will be coming from that side. We can frame the answer correctly, you get a good marks on that particular thing. That is the thing. Apart from that, we have E, that is review and reporting, which will be focusing on framing your answers for what would be the effect that will have on the like no audit reports. What are the review procedures like on going concern issue? There is a subsequent event happen on that. So maybe the what is the audit procedures on that? What is the importance of written representation? These things will be covered in section E over here. Now, to give you a hint into what you are going to see in the AA exam, okay, people often tend to focus on one area, that is like no all you know the exam structure for AA is all about like no we'll be having a section A for 30 marks and a section B for again 70 marks over here. So section A, section B. So section A normally people tend to ignore. Okay, we'll focus on section B, which is constructor response question, where you'll have like no 70 marks. I'll focus on 70 marks. I'll write the answers for 70 marks. I'll get the pass mark. So that is a problem people will be like no doing. Sometimes what happens out of the 70 marks, you might end up getting around like no 45, 46, or very unlucky like no being at a 49. So what is the problem? Let's focus on that. You're not touching either a section A. We'll discuss that particular normal things over here. Coming back to live chat over here. So Jeevan mentioned audit risk and response. Tarun mentioned substantive procedures. Yes, substantive procedures we'll be covering in the day 3 of this particular crash series. So we'll be discussing on that topics as well, Tarun. Right. So employability skills, maybe like no you'd be saying employability skills as the basic thing. Okay, but it is of very important over here because you need to know how to use the basics of the Excel, how we'll be using the Excel, how we'll be using the PowerPoint in some for exam, how we'll be using the Word. We are not going for an advanced skill set for that, but we need to have an average knowledge or above average knowledge of how to use this particular thing. Now again, to pass AA guys, to pass the AA over here, you need to be very careful to look at like no 3 ways. If you are not looking at this 3 ways, you might not get a pass relating to this particular thing. So what are these 3 ways we are looking at? You can see over here, we have 3 things to look at. The marks can be divided into like the 100 marks that is available over the period of 3 hours can be divided into 3 things. Okay, one, you could easily say that okay there is 30 marks from section A, there is 70 marks that is coming from section B, but let's focus a little bit like no we'll be going into like no 3 types over here. Point number 1, there are OT case questions in section A. Objective type case questions in section A. We'll be looking at objective, test, case study, question. So we'll be having multiple choice questions. You already know if you are an ACCA student. If you are not an ACCA student or just going to get, you've done seeing that in the exam kit as well. So we'll be having a small scenario given. Based on that small scenario, we'll be having 5 multiple choice questions coming up where you need to give the answers to. So ideally, we should practice this particular question from Study Hub. Okay, where ACCA have the Study Hub, we'll be practicing that. After completing that, you can go for any of the publishers, maybe like Kaplan, maybe like BPP. We can go to practice that. So doing questions from section A is very, very important. Second thing, there will be straightforward bookish knowledge questions coming, meaning it's not relating to section C scenarios. They can directly ask you from whatever you have learned. Okay, We used to do this mug up related things over there. So similar things, people will say, let's mug up the straightforward bookish knowledge question. It works little bit, but better learn and reproduce that particular thing over there. And we have a list of straightforward bookish knowledge questions which we will be sharing you towards the end of this particular crash series session. Right. So straightforward bookish knowledge questions, again 12 to 15 marks, or some exam, it's an average thing, 12 to 15 marks, but some exam it can range up to 20 marks as well. So it can range up to 20 marks as well for some exam. But I've taken an average of the past session, like 12 to 15 marks will be coming in the straightforward bookish knowledge questions, where you have to write without touching the scenario, without even mentioning that is in the case study. You can directly write. For example, let's say that you would be having what are the limitations of audit. Simple question, 4 marker or 5 marker they can give in a particular question over there. Okay, so you know that in CRQ we are having 3 questions. We will have a 30 mark question, we will have a 20 mark questions 2 times, right? So any of the questions will have a like all of the questions, not any, all of the questions will have an SBK part added. So 5 marker, 5 marker, 5 marker, if I assume for each of this particular question it will be coming to 15 marks, but in some questions it will be more than that. So it could be 12, 15, or maybe like 20. The reason one was having 20 marks, so we can keep it as 20 as well. Now the application level of your audit and assurance knowledge from whole of the syllabus area will be tested in CRQ, that section B thing, where you apply the knowledge. That totals up to 50 to 55 marks, 50 to 55 marks, where you need to apply. And this area, the CRQ area, I am going to give you that exam technique, which will give you what would be what is a way to formulate your answer, framing the answer. We exactly say framing the answer, how to gain easy marks out of a particular scenario, that we will discuss in here in this particular case. But before we go in any further into that, okay, there is one more chat came in, the area will be considering as safeguards used in ethical threats. Yeah, so we'll be having an ethical threat question also. We'll be having a another areas, corporate governance also. These are near areas and we can expect small areas. I'll tell you the importance of these areas later in the session. Now let's go into the why students fail, that particular thing. So let's look at the pass rate for the some sessions over here. Ignore the dates in between, but let's look into this particular thing from March 2023. So we'll be having 44, we'll be having 45, 42, 41, 44, 44, 47, 44, 47, 44, 46, and 46. So we are actually having in December 2025, the pass percentage is 46%. Now, I don't generally care about this particular pass percentages, but as a student, you'll be looking, okay, AA is very tougher. AA is only having less than 50% chance. Merely if you are looking at global pass rate, you'll be seeing this paper as the second worst passing rate. So after PM is the one having lesser pass percentage. So this one paper is in the skill level, we'll be having a lower pass percentage on. But it doesn't matter to me, because it all depends upon how you prepare. Now I'll give you the reasons why the pass percentage is less over here. But let's say that no, I'm giving open to you, no, let's have interaction over here. How can you what do you think are the reasons why this pass percentage is very less, if you can? So I have a question from Shruti over here. In the exam, should we type directly in the question paper or in a separate Word document, and should we upload or something during the exam? I believe, Shruti, you have not practiced in CBE Practice platform. So we have a CBE Practice platform if you have done. So normally in the exam, the questions will come and the questions will give you a particular window where you will be entering the answer. So it's not like you are uploading the word or something like that. So there is a area where there is an answering area where you will be entering this particular answer into, and that will be valued. And careful, there are 2 areas. There is one called scratch pad, which will be rough notes for you. Anything that is entered into the scratch pad will not be marks. There will be given area or designated areas inside the exam where you will be entering the answers. If you enter the answer, that will be given to the examiner and that will be marked. So section A, it's automatically marked by the computer itself. Section B, examiner will mark manually. So be careful with that particular thing. I hope that clears your doubt. Okay, and Benita is actually looking like no procedures and how to frame the answers. Yes, we are going for that. Now let's say what are your thought process on why the students will be failing this particular exam? Anyone? Any reasons? Okay, so let's discuss on the reasons. Okay, we have 7 reasons which could be causing you guys to fail the exam. Okay, number 1, okay, lack of exam practice, that too under time conditions. So the major problem people will be often facing is, okay, the timing of this thing, or you are not practicing question. Okay, as Indian students, or as anyone over here, normally we used to having like no like studying this particular concept again, going through the textbook again and again, reading through the concepts again. This doesn't help much. Okay, ACCA papers, be it AA, be it any other papers, basically is a kind of like no application level. You learn some concepts, you need to just apply it into that. So in that case, when you are applying this particular thing, you need to know how to apply that, which will be only available, or that skill will only come to you when you practice the question. And when you practice the question, try to keep it under the time limit. So the time limit for you is like no, it's 3 hours, 100 marks, so per mark will be going for 1.8 minutes. But what I generally expect the student to use is basically like no, do it under 1.5 minutes, try to finish under 1.5 minutes, so that you will have little bit time to go through the answers. If you have any flagged answers, to go and recheck again, so that you will have a time. So this cannot be done in once in a while. Now we are at like no 21st February, so it will be very difficult for you to like no work on that timing if you have not already worked on. But yes, we will have some sites where it can help on to increase like no the typing speed. The 7 point you can consider here, the poor typing speed, that could be another reason of failing, which can be increased by online tools which are available. Okay, typing.com is a site where you can consider like no free registration, where you can go in, you can type, check the typing speed. Or else what I generally suggest is take a question, okay, plan your answers, and then type in over there. You start using the system, not using the notes. Type your answers, which will help you out for this particular thing. Right, now relating to the second reason is you are not focusing on section A. You're not at all focusing on your section A over here. Section A, use of ACCA Study Hub. Okay, section A, try to do the questions of case study questions, meaning relating to section A from Study Hub itself. Do it from the Study Hub itself. Why it is important? There is a possibility that similar questions can come in your ACCA real exam as well. So focus on AA. Focus on AA ACCA Study Hub questions over there. Okay, we need to work on that. So I would say like no, it is 21st now. We'll be having exam on 2nd of March for the March exam attendees. So daily basis, at least like no 3 questions in the morning, 3 questions in the evening you can try on relating to the case study question. So it would be better to have it. Second thing, scoring below par in straightforward bookish knowledge questions. So as I said, these are straightforward questions. It has nothing to do with your scenario. So these are some areas which are being repeatedly asked also. So we will have that particular document with us available. So I'd be normally sharing with all my students with SOE Global who will be doing like AA. So we'll be sharing this particular thing with you at the end of this crash series, which you can use on. Right. Then missing exam technique in core areas. So each of the core areas, as we mentioned, so audit risk question, internal control related questions, substantive procedures, and also the reporting. So there are some formats, there are some ways to answer this particular thing where you can give, where you can get the marks. Okay, as I mentioned, okay, it's not what you think, it should be the way like no what examiner wants from you, you have to write. So we will give you that particular way to do this particular thing. So we can focus on that particular area, we can go into that particular area, how to track that answer. Shortly we will be doing that with the audit risk questions, so we'll look into that. Now the fifth one is about ignoring the minor area, focusing on the question from Akshaya over here, safeguards used in ethical threats. Ethical threats and corporate governance area, it comes for around 4 to 6 marks. Okay, ideally in a section B itself. Ideally in section B itself, it will come for 4 to 6 marks. Okay. But again, there are some areas you'll be thinking, okay, let's study the core areas only. Let's focus on the section C core areas only. Sorry, section B core areas only. So like focus on auditors. Let me focus into internal control deficiencies or good controls. Let me focus something on substantive procedures. Let me focus on reporting. So if you're focusing only on this particular thing, you're ignoring something like no minor thing. For example, can something be advertised? Can an auditor can advertise on this thing? What are the quality standards, quality deficiencies or quality safeguards we can take on? So these particular things like no you tend to like no ignore, and that is the biggest mistake again, because the examiner always says whatever is there on the syllabus, whatever is there on the syllabus, it will be questioned. Whatever is there on the syllabus, it will be questioned over here. So if you ignore the minor areas, especially ethical threats, okay, corporate governance and quality deficiencies, quality management deficiencies in an audit, okay, I believe in your BPP chapters it is there covered in your chapter number 5 or 6. So you can have that quality management things. So in an Excel we have for the study lecture notes, I have given a particular quality management exam technique as well, so we'll be going through that later. Okay, right. So again, not attempting test assignments. Okay, leave it now. Test and assignment area has been done right now, so we'll be having mocks. In any other institute, like no, be it SOE Global, be it any other institute, they will be providing you like no with mocks. Or if you are not enrolled in any of the particular institute, also you will be having what? You will be having a CBE practice platform where you can have past exam papers, where you can practice on the past exam papers. Okay, so that should be attempted under time condition. At least like ACCA is giving you that option, like no, there is a pre-mock that will be released every time when an exam session is coming up. So when you have that exam session coming up, you will go through that particular pre-mock. At least you will try that. So we would normally do like no around like 3 mocks in SOE Global. Okay, it should be valued by the respective faculties. We will be giving feedback on time for them, so that we can work on, the students can work on like no what has gone wrong in their answers. So 3 marks is all we'll be doing, and we'll be keeping as far as like no as far as and AA faculty, I'll be keeping my AA marks very difficult in the sense that it will be difficult than the AA exam you will be receiving, so that when you receive a AA exam, okay, it will be like no little bit easier for you in the real scenario. So that is what we are looking at. Okay, so right now let's go to the agenda. So this is the overview of like no AA relating to you. So we'll take any questions if you have. I'll take 2 minutes. Any general questions you have, or else we will go for the day 1 agenda, which is your audit risk related things. So we will be going into the day 1 concepts. Right, which will be focusing into the audit risk. Yeah, so any questions from the audience? We can take on like no what is the audit risk. Okay, concepts we will cover up. Practice questions we are doing to do a particular practice question also. Okay, right. So without any like no your chat box is open already over here, guys, so you can put in or shoot the questions in between also. I'll come back to the live chat, I'll give you the response also over here. Right, yes. So let's go into the concepts a little bit. I'm not covering the concepts a lot. We will go for the practical approach over here. So let's look into like no the audit risk. What is the audit risk we are looking at? So audit risk is basically okay, the risk that the auditor will be giving a wrong opinion on the financial statement. So normally wherever you go, we'll be using like no be it EY, before we are talking about, be it EY, be it KPMG, be it PwC, be it Deloitte. Okay, we'll be following international standards on auditing, which requires a risk-based audit. The focus should be given to the risky areas more in that audit. So that's a risk-based audit. So audit risk is nothing but, audit risk is a risk that auditor will be expressing a wrong opinion on the financial statements Even like no, there is a something like they are telling, okay, financial statements are free from material misstatement, but there might be some errors or misstatement there. So this is an audit risk. Audit risk can come from, okay, the major thing, if you are going for like no material misstatement, let's focus on that material misstatements. So material misstatement is basically coming like no, it's a reported ACPD, that's a short form I am using, okay, relates to difference in reported ACPDs in the financial statements and the required ACPDs relating to ACDs. So meaning you will have account balances, stands for A, account balances, class of transactions and disclosures. So that is ACD. Account balances meaning all those balances that will be coming in your balance sheet. Class of transaction means all that balances or transaction that is coming in your P&L, and disclosures will come for your balance sheet and also for your this thing, also for your P&L thing. Okay. Now reported versus required. Reported versus required ACPD. A stands for, okay, what is the amount that is visible in the balance sheet? What is the classification? What is the presentation? What is the disclosure? So required versus reported, what is being given by the entity. If we see a difference, that is known as a misstatement, and that misstatement we are not finding out, that could be your risk over here. So without further spending much time on that, so audit risk, as we know, audit risk is a risk that the auditor expresses an inappropriate audit opinion when the financial statements are being misstated over here. So that is a case. Now it will be divided into like no inherent risk, it will be divided into control risk, but major thing audit risk is like no, we'll be having risk of material misstatement and the detection risk. Risk of material misstatement is coming from the management side. Due to inherent risk, something can happen. Due to control risk, something can happen. So what is an inherent risk? Inherent risk is a suspectability of an assertion about an account class, account balances, class of transaction or disclosures to a misstatement. So we are suspecting an assertion of a ACD for a misstatement which would be material individually or in aggregate without even considering internal controls in place. So basically, inherently, what is the risk you have relating to an assertion of an account or class of transaction or disclosures? That is known as an inherent risk. Control risk is the risk that the material misstatement occurs in an assertion about an ACD, which would be material individually or in aggregate, okay, will not be prevented, will not be detected and corrected on a timely basis by the internal control. So now we have put in some internal controls, who management have put in some internal controls, that controls is not like no finding it out. So that is the control risk. And finally we are having a detection risk, meaning the auditor will be failing to detect any kind of risk or any kind of misstatement. So it's the error from the auditor side, which will be divided into sampling risk. You take a wrong sample, the sample is not representative of the population, or it could be resulting from a non-sampling risk, like any other thing other than sampling, like pressure, time pressure, auditors lack of experience, financial constraints being placed on them, okay, no planning or poor planning done by the auditor, okay, or lack of industrial knowledge, or be it a new client. So detection risk could come from either sampling or non-sampling risk. Now let's focus on how we will be framing the answer. This is very, very important, guys, how to frame this answer. Before that, let me take in that particular question from Tarun over here. For section A questions, practicing in exam kit is enough, or what else we should learn? Tarun, I would recommend you start with Study Hub, ACCA Study Hub. Section A questions, start with Study Hub. I would ideally say you should at least complete twice all the questions in Section A of the Study Hub twice to have a good knowledge, to have a good scoring in Section A. And again, like no Study Hub, when I say practice from Study Hub, it's not like no, you do a question, you get an answer, okay, you get a correct answer, you leave that question. You need to look at the options, the other options, why the other options are wrong. If you're not getting that particular thing, because ACCA can twist you like no same question, they can like no do it the other way also. For example, let's say that in for a question they will be asking you which of the following is true relating to audit evidences, okay, or they can ask the same question, which of the following is not true relating to audit evidences. So you need to know the reasons why this is true, why this is wrong. So a right question also, you have given a right answer in the Study Hub also, you need to look at, okay, why the other options are wrong. That we need to consider over there, section A. And again, section A, you need to look into this particularly. There are two ways of answering, as I would say to my SOE students. Okay, so we'll be looking into like this SOEs students. I have given this particular thing like we are having like a way to answer this. We can either choose a right answer because we are confident, we know the confidence, okay, this is a right answer. But in case we are in between an angel and devil answer, big devil answer which looks like a right answer, we need to like eliminate the options over there. So there are three kinds of answers: bullshit, devil, and angel. So you'll remove the bullshit answers. You know that by the first look itself, okay, this is not the right answer, take it out. So we'll be having rest of the options. So from that, choosing the angel answer is the basic thing over here. Again, taking a question from this one, game changing player, how many chapters in this paper? Depending upon like which publisher you are choosing, BPP or Study Hub, the chapter number is being differing actually here, but the syllabus area is the same. I think in BPP will be having around 15 to 20 chapters. Study Hub also that many, 26 chapters are there. So you can go through. I think in Kaplan it's less number, but it is very big chapters basically, right? Yes. Shruti, I was your student at SOE and I'm majorly concentrating on your lecture notes rather than the actual text. Anything to be included from the book or the notes are enough. Okay. I would say at this moment, like the notes are enough because I have been just covering this. I'll be sharing you this particular study book. No, that questions is at the end of that lecture notes also there, which will be discussing about like what are the straightforward bookish knowledge questions, and I'll be sharing that document where we'll have that past papers, what were the bookish knowledge question asked. I'll share that particular thing. So Srihari's question, should we always mention IFRS while answering the questions, are not necessary, Srihari. So you just need to know what is the accounting treatment over there. Okay, so we will like if you don't know the number like IAS 2 inventories or IFRS 15 revenue, if you don't know the number, the better way to, if you want to code that particular thing, you will be coding like as per IFRS like that. So you don't have to code the IFRS, but you might need to tell the, when you explain the required treatment, basically you would be quoting down as per IFRS or as per IAS, this is a treatment. So you need to code the treatment most of the cases, but not the IFRS number, not the even ISA number also not needed much. We need only the concepts over here at AA level. I think we have answered, we have touched all the questions from here. Now let's get back to how you will be answering an audit risk question. Okay, there will be two marker. There will be a 2-mark question, or there will be 2 marks available for each of that particular risk you will be looking in. Okay, right? Now let's break it down to 2 parts, and this is how they will be giving you in your ACCA original exams also. They will give you a table and they will ask you to write down the answers into this. So how to tackle this? Let's focus on the audit risk side. We can break down the audit risk marks into 3. Okay, half a mark is available for what? Half a mark is available for identifying the situation which is giving rise to an audit risk. So this is very easy if you have gone through around like 5 or 6 questions before, because we can see around some audit risk are repeating, only the figures change, only the companies change. So it will become very easy for you to do this. So you just need to do what? You will copy paste that from the question. In real exam, you can copy paste that from the question, you can put it into that, and you will be copying up there. So identify the situation, copy paste. Why I mentioned copy paste? You don't have to type in, you don't have to spend time on that. You can directly copy paste. Either right click and copy. If right click and copy is not working, you can press the shortcut Control plus C. Control plus C you will be doing over there, and you can put that over there. So that is one thing we'll be considering over there, right? Second one, you need to explain why that is a risk. You need to explain why that is a risk. So why that is a risk? As we mentioned, there would be a possible misstatement. There is a suspectability, the suspectability to be a misstatement relating to risk of material misstatement, where we will be using what was the required treatment required under IFRS and what is the reported situation given in the FS or given in the given in hand. What is the reported situation right now? Okay, so if I take the example, let's say as per IAS 2 inventories, the inventories should be measured at the lower of cost or net realizable value. That is the required treatment. But there might be a possibility that the company would have measured the inventory at standard cost, so which is not meeting with this requirement. So requirement versus reported, if you are not meeting it, it could give rise to a particular audit risk. Now that is why now third part is impact on FS. Very 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 critical, guys. Here, impact on FS, it would be stating which line item, be it like no inventory. We said in inventory, the figure could be misstated, figure could be overstated, figure could be understated. Now, if a given situation gives you chance for overstatement of something and understatement of something, then you can use the word misstated. Okay, otherwise if you are clear from a particular situation, that for example, if I take an example of your trade receivable days are increasing, meaning your average trade receivable takes more time to pay, which will be an indication that okay, there might be a chance of more bad debts. So the allowance you have given for that bad debts, or the provision you have given for the bad debts, might not be enough, so it would be understated. So you are clearly saying that okay, there is a chance that this would be understated. So there, if you say misstated, you will not get any marks for that. So very careful when you will be using misstated, when you will be using the other way around. So audit risk related situation, this is the key over here. Audit risk and auditor's response over here, that is the key. Okay, now if this was a detection risk, meaning from the auditor's side, it will not impact your FS, because FS is prepared by the management, so it will be inherent risk. Control risk will touch your figures in the FS. Detection risk is that no, you are failing to look into the particular thing. So impact on FS will not be there for a detection risk. Detection risk will be always okay without an impact over there. So you will be leaving that impact on FX side blank, and you will be explaining why it is a detection risk in the second part over there. So apart from a detection risk, all the risk of material misstatement risk will be having identify the situation, develop your answer by stating why, and we'll have an impact on FS. This is the first side relating to that. Second side, you need to give an answer. Okay, very very clear on this particular thing. Why the risk, or what is the risk you have mentioned on the left side? You need to give the answer. You need to give the answer to that. How an auditor can reduce the risk of material misstatement affecting your audit opinion. I will repeat once more, guys. Take it very clearly into your thing over here, into your mind over here. Okay, what would be the procedures auditors would do to reduce the risk of material misstatement affecting their auditor's opinion? So meaning, highlight what auditors will do. Highlight what auditors will do. So we need to consider here, what is auditor's response over here? What is the auditor's response over here, guys? Okay. Okay, what is the auditor's response we'll be looking at? Auditor's response is basically what auditors would do. What auditors do to reduce risk, or to reduce audit risk in total. So that is like no what from the auditor side. Now the biggest mistake people will be making here, mistake people will be making over here is what? They will write down, okay, they will tell, okay, management should do this particular thing. It's not management. This is an auditor's response, guys. Focus on that very clearly. What auditors will do. So what can auditors do? What can auditors do? Yes, anyone? What can auditors do? Auditors will be doing audit procedures. Auditors will be doing audit procedures, and audit procedures will be left into two things. We'll be having test of control, TOC, test of controls, and substantive procedures. Substantive procedures. So anything can be there. So you can give an audit procedure that is to be done by the auditor, so that they will have a clarity that no, this will be getting reduced. So it could be testing the controls, or it could be substantive procedures they'll be looking into. That is the case. Okay, right. Now another questions came in. Okay, Akshay is asking, could you explain more about the detection risk? Okay, we will take an example from the question and explain, or please remind me at the end of the section, Akshay, to discuss about this particular detection risk. Okay, right. So now let's focus on to this thing. With this particular thing, how to reduce the risk is the question. Okay, second one, response should align with the risk discussed. So you would have been identified risk, giving a response which is not reducing that risk. That will not be the case. Now again, the third point is crucial. Again, if you want to discuss about any IFRS, if you want to discuss about anything about the IFRS, please discuss it under audit risk column, not under audit response column. Audit response column, never touch audit standards, or let's say IFRS standards over here, because the marks will not be given, because the marks is for what the auditors will be responding. So response should be there. So anything like you are reported required treatment, that will come under Y area of that particular thing, right? Yes. So now let's jump into a question, okay, and try to sort out that particular question for you. So I have taken in a particular question which is the latest one from your from your CBE practice platform, so that we will do this particular thing. And again, whenever you receive a question, the first thing to look at, read from below. You need to read this from below option. Why we need to read from below? Because you need to understand what is the question requirement. To understand what is the question requirements. Only when you understood the question requirements, then you can answer the question very clearly over here. So let's focus on this particular thing, right? So let's go to the question over here. So B is asking for you. Question number B is asking for you, using the table below, meaning using the table below, or let's say corrected, using the table above. Using the table above, okay? Or in the exam, basically, there is a table given in the format to enter the answer. So we'll be entering that. So considering the above, calculate the three ratios. So we have a three ratios that is being given in the pre-formatted thing. Okay, if you go down a little bit, you can see over here. One moment. Yes, so we'll be having three ratios to calculate: operating profit margin, receivable days, and payable days to calculate over here. So operating profit margin, receivable days, and payable days, you need to calculate over here. But read the question very carefully. We need to calculate for three ratios. We need to calculate for both years. Okay, we'll assist you in planning audit of survival solutions company. Okay, they have given you the ratios also. Now, very important, you don't need the formulas to be shown in the question. You don't need the formulas to be shown in your question. You can ignore that particular thing. You can ignore that particular thing. Clear? So you can ignore that particular thing. You just need to calculate this particular thing, right? So, but again, let's work out what is the formula for operating profit margin? What is the formula? Operating profit margin. Anyone? What is the formula for operating margin? Yes, guys? We'll be going with operating profit divided by what do you do? Yes, guys. Operating profit divided by what will you do? Operating profit divided by your revenue. Operating profit divided by your revenue. So it is basically your operating profit divided by your revenue, okay, multiplied by 100. Okay, receivable collection period. How do you calculate receivable collection period? Receivable collection period is calculated by receivables divided by credit period, or is it the other way around? We'll be going for trade receivables divided by credit sales, and you can assume over here it's a 365 days, so 365 days over here. And similarly, payables payment period will be using trade payables divided by trade payables, which is we are looking at trade payable of over here, and divided by, you will be going for credit purchases. So if credit purchases is not available, if credit purchases is not available, you can replace this particular thing with your cost of sales. You can replace this thing with your cost of sales into 365. So can you guys easily calculate this particular thing? Yes, if you know the ratios, you can easily calculate this particular things. Okay, so looking into the questions, revenue is given for each years. Okay, you can easily calculate. So we'll be taking that particular thing. So operating profit margin for 20x5 is equal to, your operating profit is 4210 as per that particular thing, divided by 17860, divided by 17860. Okay, now into 100 will give you that particular percentage, so 23.57 percentage. Similarly, I am going for 2000 x4, where you will have operating profit of 2500. Okay, we'll have 2500. Okay, divided by, what is that particular thing, you have a sales of 17280, so 17280 you're taking over here. So we'll be having like into 100, I have not put in, so let's put in into 100. So we'll be having 14.4676 as it. So let's round it to two decimal places. Let's round it to two decimal places. Okay, yes. So let's keep it to two decimal places. So 23.57 percentage and 14.47 percentage. Now the other thing, we are looking into trade receivable days. So trade receivable days or receivable collection period will be having equal to, what is the figure you need to look at? Trade receivables for 20x5 is 2360 divided by, sorry, 2380 divided by your revenue. We are taking like, no, revenue assumed to be total credit sales, so 17860. You will take that particular thing, right, into 365 you need to do. So normally given inside brackets. Okay, so into 365 you will have 48.63 days. Okay, or 49 days we can round it to. The next one is same case again over here, we'll go to that. Okay, 950 is the trade receivable, 950 divided by 17280. So 950 divided by 17280 whole multiplied by 365, you will get 20.006. So rounded to the whole numbers, this one to the days, so we'll be having, okay, 49 days. Okay, so this one is in percentage, this one is in days, and the other one also in days. So over here days, over here payable days is equal to payables given over here, that is 1400 divided by purchase figure is not available, so you will take cost of sales, that is 11050. Okay, and again we need to multiply that particular thing with 365. You will do that 365 over here into 365. Okay, you will have 46. Okay, similar way we'll consider over here for the next thing, 2350 divided by 10,680. 2350 divided by, or brackets will start, 2350 divided by, will be having 10680 as your cost of sales into 365, will be having around 80 days over here. So rounded to whole numbers again. Okay, right, we'll have 46 days and we'll have 80 days. So just by doing this, you don't have to show the formula. Just by doing this, you'll be getting what? You'll be getting how many marks? You'll be getting how many marks? Yes, we'll thank you for guys, Deepak, for the particular this thing, like the entries over here. So just by doing this particular thing, you're calculating, okay, it's a half a mark for each of the figure, or we'll say OP margin total of 1 mark, receivable days total of 1 mark for 2 years, and payable days total of 1 mark for this thing. So you are easily getting this 3 mark over here. So see, B, we are having 3 marks over here, and this 3 marks is easily get by doing like, no, you got this, you got this, you got this. So half a mark for each of this particular years you will be getting just by calculation 3 marks. These are easy marks, right? Now let's look at the second part of the question. Second part of the question says, using the information provided. Okay, one thing, using the information provided plus what? The ratios also you need to use. The ratios also, the calculated ratios also in B. Using the ratios calculator. So information plus ratios. Describe seven audit risk. Again, the key term is describe. Describe 7 audit risk and explain the auditor's response to each risk in planning the audit of survival solutions company. So we need to have 7 audit risk, okay, and the auditor's responses to those 7 audit risks over there. So here again you would be given a particular structure over here to write. So they will give you a table. I've just colored it for your understanding only, but they will give you a standard table over there. They will give you, we need to give the auditor's risk, identify from that particular situation, and then you need to give your auditor's response over here. Risk and response. They will give you a table and you will be using that table to fill in this particular thing. But before we go into this particular table, it is essential that you go through the scenario once and identify the possible audit risk, and from that choose the best 7 you have. Choose the best 7 you have. So they have only asked for 7, but the question will have more than 7. So how the split is that? 14 marks, 7 marks for audit risk, 7 for audit risk, okay, 7 marks for response, auditor's response over here. This is how we'll be splitting this particular table in. Clear on this? So let's go and read through this particular question. Okay, before that, any questions? I believe in chat you have any clarity to be needed over here. Okay, so let's read through this. You can put your queries in the chat box, guys. Okay, right. So now getting into this particular thing over here, the scenario relates to 3 requirements. The scenario relates to 3 requirements over here. Okay, and we are going to read through this particular question. We need to understand, okay, where we are standing, what is the time you are in, what is the year end. Like that we need to go through. We are at the planning stage most of the cases for an audit risk question. We need to plan the audit, and during the planning stage what could be the possible auditors coming up, that is what we have to decide on. So let's go back to the question and we'll read through the question, and okay, we will be I'll be just giving you chance also to identify, like, no, is there any auditors relating to this particular area, right? So it is now 1st July. So what is your standing point? It is now 1st July 20x5. Okay, you are playing the role of an audit supervisor of canoeing company responsible for planning the final audit of survival solution. So who is your client? Who's your client? Canoeing or the other one? Who's your client? Okay, survival solutions is your client over here. You are part of a audit team of other team. You're part of another team over here from the canoeing company. So audit firm is canoeing company. Audit firm is canoeing company. Okay, and we are actually having survival solutions, which is your client. Survival solution is your client in over here. Yes, and you have an year end of 30th September 20x5. You have an year ending of 30th September 20x5, and the company manufactures medical equipment. Okay, so the thing is, like, no, they are manufacturing concern of medical equipments, and you attended a planning meeting at the end of June with the finance director and audit engagement partner, and are now reviewing the prior year audit file. You are reviewing the prior year audit file. You will be reviewing the meeting notes and the financial statement extracts in order to produce planning documents. Ideally, guys, most of the situations, okay, in some questions you would be only considering, like, no, you would be only considering what? Only the meeting notes you would be considering in most of the questions. But in this question, they have given you additionally prior year audit file, and they've given you, like, no, financial statement extract also. So your answer should come from all of these particular things. So let's consider from the planning meeting notes. So in the planning meeting notes, okay, the report to management issued by canoeing company following last year's audit highlighted significant deficiencies relating to survival solutions company's payroll cycle, and the finance director has stated that some but not all of the recommendations made in the report have been implemented during the year. Okay, so yes, guys, so do we see any kind of risk over here, or you are not seeing any risk over here? Yes, back to you, The baton is passed back to you guys. Okay, right? Right. Even for that, okay, survival solution, yes, good. Right. Now let's consider this particular thing. No, the first paragraph, the planning meeting notes, first paragraph. Are you guys seeing any risk in that particular paragraph? Let's plan your answer. Yes, there is a risk. Yes, Shrihari is saying yes, there is a risk. Yes, what is that risk, guys? What is that risk? What is that risk? What do you think is a risk? What do you think is a risk? Yes. Back to you guys. What is the risk? So you should understand that the examiner will not give you any paragraph for free. There will be something hidden inside that particular paragraph for what you can make use of. You can make use of that particular thing very clearly over here, right? So what is the risk? Not all recommendation corrected. Thanks Sri Hari for that. Okay, I believe it's Sri Harin or it's Sri Hari. Can you just give me a heads up on your name exactly? Like no, it's Sri Hari or Sri Harin. The mail ID seems or the ID seems like no Shrihari. I'm just saying Shrihari only. If you can correct me, Shrihari. Right. So now let's get into this particular thing over here. It's Srihari. Yes, Srihari. Right. Srihari N, I believe. Yes. So Srihari, yes. Again, okay, Ritika, yes, coming with risk of implementations, recommendations given by the auditors in PY not executed for current Y. So you are identifying. So what we'll do, I'm just going to list down this particular thing. Let's plan this. Okay, list of audit things. List of, right. So list of risk identified. Let's keep the list of risk identified. Okay, number one. Okay, recommendations given. Recommendations in prior year. Okay, not fully executed by management. Not fully executed by management. So you can consider that as your number one thing over here. So meaning like we are looking at not all of the recommendation made have been implemented during the year. So you can either copy paste the whole paragraph, or you can this thing like no, report to the management had significant deficiencies, okay, relating to the payroll cycle, and not all this, whatever underlined in the report to the management, there was significant deficiencies relating to payroll cycle, and not all of the recommendation has been implemented, meaning that there are still some deficiencies in the internal control of the payroll cycle. That is your risk over here. I believe you understood that particular thing, right? Yes, that is the first thing. Now let's go to the second paragraph. So you have identified risk number one over here. So risk number one. Okay, I'm highlighting that also. We have identified risk number one. So next, like no, risk number two, let's consider the next paragraph. Okay, read through, guys. I will also read through along with, please read through. Okay, survival solutions company manufactures the equipment at its factory and stores finished goods within its warehouse. So they are manufacturing the equipment at its factory and stores finished goods within its warehouse. Due to the limited space, some finished goods are stored in several third-party warehouses. Okay, so meaning we have some storing in that particular things. And again, during the year, the company spent 650,000 upgrading and repairing its factory and warehouse. And as part of this upgrade, Survival Solutions Company exchanged a large item of plant with a carrying value of 85,000 and fair value of 90,000 for a new asset worth 120,000, with the difference being settled in cash. The asset has been recorded at the amount paid in cash. Okay, so the asset will be recorded in amount paid in cash. That is the thing. So from this paragraph, how many audit risk you guys can identify? You can list down, guys. From this particular paragraph, how many risk you can identify from this paragraph? Yes. Yes. Anyone with 3 risk? Anyone with 3 risk in here? You can type in your risk identified from this particular thing. I would say, okay, If you get 2, good. Okay. If you get 3, very good. If you get 1, you need to work on this particular paragraph. Yes. So Deepak is coming with one thing like now finished goods kept in third party. This may not be included in the inventory count, or this may be rather than the inventory count. This may not be included in the inventory amount recorded in the financial statement. Deepak. Yes, one risk. Yes, I agree. Second, okay, Ravi. Okay, we are going with the goods in the third party warehouse can be misstated. Yeah, rather than goods in the third party warehouse is misstated, we will frame it as, okay, inventory amount might be misstated because there is a chance that you are not counting or you are not getting the exact the quantity or exact condition of the goods at a third party location, or you might miss on counting. Even the management might miss on adding that particular thing in here. So that could be one thing. Yes. So in that case, okay, people would have identified risk number 1, risk number, okay, risk number 1 already done. Risk number 2. What is risk number 2? Highlighted area. Due to limited space, some finished goods are stored in several third-party warehouses. Copy paste this thing only. So you got your risk number 2. What is the risk over here? Why the risk? We'll explain. Why the risk it is? We'll explain that. Okay. What is why the risk? Since it is stored under third party, again, several third party warehouses, there might be a misstatement or there might be a error from the management side that they will not add it in the finished goods as at the year end. So that could be that particular thing. So yes, anything else in that paragraph for any audit risk? Anything else? Yes. Yes. Anything else? Right. Second, we have identified, is there any third risk? Is there any third risk? Next sentence. During the year, company spends 650,000 upgrading and repairing factory and warehouse. Do we seeing or do we sensing any risk in that? Do we sensing any risk in that? Yes, guys. Yeah. Cost of repair, yes, Deepak, again, cost of repair may have a change of manipulation, or let's say that, okay, going in again into that particular statement. What is that statement saying clearly? The valuation of asset, like there could be a wrong thing in the valuation asset. Yes, let's consider company spend during the year. Take that particular sentence over here. During the year, company spend 650,000 for upgrading and repairing. So the treatment of upgrade, the treatment of repair is different. Okay, so meaning we'll be having again third risk coming in from during the year. The company spends 650,000 upgrading and repairing. So the treatment of upgrading is different. The treatment of repairing could be different. So there is a chance that any cost that is belonging to the normal repairs could have been added with the capitalization cost, or anything that is relating to upgrading which is capitalized in nature could have been expense off in the repairs. So that is the risk that we'll be having over here. Yes, understood. Now, do we have another risk in the next sentence? Do we have another risk in the next sentence? Yes. Okay, asset recorded in amount paid in cash rather than the actual value. Yes, Shruti, you are up to the point, but you need to reframe that particular thing over there a little bit. Rather than the actual value, no, not the actual value, rather than the fair value of the asset that is being received. So let's read this particular thing over here. As part of the upgrade, Survival Solution exchanged a large item of plant with a carrying amount of 85,000 and it had a fair value of 90,000 for a new asset worth 120,000. And with the difference being settled in cash. So difference settled in cash meaning like no, they would have said like no 120,000 minus 90,000, that 30,000 which is like no difference in fair value, that 30,000 is settled in cash and the asset is now recorded at an amount at that cash amount only. That is the treatment they have considered over here. This should you understand from the reading through that. So meaning 85 it was, you are actually going to like no exchange it with a fair value of 90,000 for a asset which is having a fair value of 120,000. Difference is like no 30,000. So that 30,000 is cash, and that cash settled is only that value that is recorded for the asset. Is it wrong? Is it not wrong? Shruti is claiming it's wrong. And why it is wrong, Shruti? If you can elaborate on your thing, why it is wrong? Why it is wrong? Why it is wrong? Okay. Why it is wrong? Something exchanged. Large item has been exchanged for a new asset worth 120,000. 90,000 was the fair value for the other thing. 120,000 the fair value of new asset. What should have been the accounting treatment basically? What happened over here is that you should have been recorded 120,000, but they have recorded only 30,000. That is the situation over here. Okay. So we are getting again risk number 4. Risk number 4 relating to this particular thing, risk number 4. So that is the concept over there, right? The fair value might not be included exactly, Shruti. That is the thing over here. So now to list down what we have identified in this particular paragraph. Second risk you have identified as third party warehouse, and the inventory kept over there. So inventory over there, third party warehouse, inventory has been kept. Okay. Third risk you will be considering over here as, okay, cost of upgrade and repairs, relating to cost of upgrade and repairs over here. Fourth one is about, okay, exchange of okay, plant, exchange of plant for new asset. So this is the 4 risk you have now identified over here, right? Yes. Now next paragraph, let's read to the next paragraph also. So in order to maintain the company's market share, Survival Company Solutions now offers extended credit terms to a number of its customers. Extended credit terms to a number of. So do we have any problems? Do we have any problems with this? Extended credit terms to a number of its customers. Since they are mentioning this extended credit terms, we can go down, guys. We can go down and consider what is that extension resulted. You can see over here what has resulted over here. We had 23.57, sorry, not 23.57. We had receivable days increased to 49 from 20 days. So there is a major increase. We would say like no more than 100% increase in the receivable days over there. 20 increase, 40 would be like more than 100% increase. There is a significant increase in the receivable days, maybe resulting from this particular extended credit period. But when it happens, what would be the problem we'll be facing? Anyone can answer that? When you are giving more thing, age receivables can be irrecoverable. Yes, Ravi, right? Age receivables can be irrecoverable. Any allowance can be made accordingly, or maybe receivable days. What can you elaborate on, Deepak? Maybe receivables increase, receivable, okay, right, allowance for receivable may be understated. Yes, allowance for receivable may be understated relating to that. So there is a chance that, so here when you write the answers, guys, you need to be very careful. The receivable days could have been increased due to this decision for the extended credit period, but it might result in maybe the increase should be relating to like this decision, but there is also a chance that people are taking benefit of that particular thing over there. So we need to be careful. We will say maybe there is a chance. So again, like you can identify this particular thing over here. Fifth one, okay, increase or extended receivable days. And also you need to refer to your calculation, in B part you have done. Okay, refer to your calculation. So the fifth one you're looking over here is, okay, increase in receivable days, or we will consider receivable days from, okay, 20 to 49 days. So this would be the another risk you will be identifying over there. And as you guys generally stated over here, correct only, okay, the receivables might be overstated because you have not given apt or accurate provision over there. The provision might be understated, so that could be one reason. So there would be people who might not be paying on time. So let's read through the next paragraph. So survival solutions company, yes, evaluation of the asset becomes wrong, causing depreciation and other expenses in the future to be estimated at lower value. So before we reading, okay, thanks, we need that proactive things, right? So we need to consider over here, right? So yes, Ridhika. Okay, now Survival Solutions Company offers its customers a 3-year warranty on its products. The finance director has confirmed that the 20x5 warranty provision will be similar value to 20x4. Last year, the company changed its main material supplier to a cheaper alternative, and this has resulted in an increase in customers claiming on the warranties for the product deficiencies. Right? Okay. So, Ritika, I think Ridhika or Ridhik, right? So you can just consider this particular thing. Okay, this is evaluation of the asset becomes wrong, causing depreciation and other expenses in the future to be estimated lower values. Is it relating to which one, which area, which risk? If you can come up with which area you are talking about, this paragraph you are talking or any other paragraph? Yes. Right. So let's focus on this particular paragraph here. What is the problem? We are talking about warranty. So what is warranty, guys? Anyone knowing about warranty? What is warranty? Normal warranty, 3-year warranty on the products. Normal warranty will come under IAS 37. Okay. Additional warranty or extended warranty will come in IFRS 15. Okay, here it's not additional warranty, it's normal warranty that is coming along with the products. So they are offering 3-year warranties over there. Should we mention the increase receivable collection period in the audit risk? Yes, better. Yes, better. So they are giving no, the receivable days has increased from 20 to 49 days because Ramida, like the problem or the issue over here is that the examiner has not given you, okay, the calculation part in this section, not for just 3 easy marks. It's need to be used in your analysis below. So when they say extended credit period, you need to make use of information you have calculated also, because the question specifically states information provided plus the ratios you have calculated. So we need to consider over there, right? Yes. So there is risk the provision is not sufficient because of using cheaper alternative. Yes, exactly, Deepak, relating to warranty. So warranty is normal treatment is, guys. Normal treatment of warranty is we will be using the last year actual warranty claim. Based on that, you will be giving a provision. So you will consider actual warranty that has came into the company compared to, like, the sales. You take as a percentage. That percentage will be applied to the current year sales to arrive at a warranty provision. That is how we will do it. But here that assumption would go wrong, because this year you have changed the quality of the materials, you have changed the suppliers, so there is a higher possibility of warranty claims coming up, because cheaper materials, there would be errors, there would be problems, right? So last year if you have given only 10% of sales as warranty claims, this year you need to give more than that, but they have not provided it. They have just king finance director is of the view that we will be giving at the same level, which will not be the case. So it will not be sufficient. So we are having a cheaper alternative. Cheaper, there would be more errors, more problems, more warranty claims. So the warranty provision for warranty would have been understated. That would have been your risk in that particular paragraph. So yes, okay. Finance director confirmed 2000x5 will be similar value to 20x4, but last year they changed the material supplier to a cheaper alternative. This resulted in increase in customer claiming their warranties. So the existing warranties might not be enough. So we'll be having our 6th auditors coming from here. 6th auditors coming from here. Clear? Clear. So sixth one is okay. Warranty or misstatement in warranty claims, relating to warranty claims, or rather than, let's say, relating to warranty provisions, relating to warranty provisions. Okay, yes. Now Next paragraph. Let's go to the next paragraph. Let's go to the next paragraph. In June 20x5, the financial controller left to take up another role. Her replacement has been recruited, but will not start until late September. Okay, so we'll not have a person working. Your year end is 30th September. We'll not have that particular person working from June to September. So there are missing period. As a result, finance department has been understaffed. So are we looking in for any audit risk here? Audit risk here. Okay. Something comment up like need to check the credit risk associated with the increase in receivable days. Bad ups might increase or provision for bad ups may be understated. Yes. Relating to that customer days. Yes. Okay. But it is not relating to warranty. It is relating to the receivable extension of receivable days. Yes. Right. Yes. Relating to the paragraph we are talking here from row number 26 to 28. In June 20x5, the finance controller left to take another route, left to take another role. Her replacement had been recruited but will not start until September. Is it creating an audit risk or is it creating a control risk or control deficiency? It's a control risk. It's a control risk because control is not going to work over there. So which will have no finance controller will not review this particular thing. So financial, what is the role of a financial controller, guys? What is the role of a financial controller? Financial controller will be looking over all of that particular financial thing you'll be, especially like they'll be reviewing the financial statement figures when you finalize this particular thing. So if no one is there to look into that particular area, if no one is there to look into that particular area, what would be the problem? What would be the problem? There will be particular error. So this having a financial controller to review this particular thing is the control that is being placed over there. Okay, now that control is not there, control is going there, which will be going for a control deficiency. Now this might take you, this is a tricky part, this might give you or during this particular thing you might frame your answer as an answer for a control deficiency thing. If you do that, you guys will be losing marks on this, guys. So here, what is the audit risk you need to consider? The control is failing, because of that misstatement might come. The control is failing, because of that misstatement is coming. So meaning like, what is the control right now? What is the control failure or control deficiency? You can take control deficiency also. A control risk is over here, but what will be the impact on that? Why that is an audit risk? You have to explain. It is understaffed. Okay. Will major points. June, finance controller left. Okay. Recruitment only made in September. So right now inside that particular thing, your finance department is right now understaffed. So review was not being taken. So the audit risk, I can take it from here is like, okay, since finance department is understaffed, so I'll work out here 7. Understaffing in finance department, we'll be considering over here, which would result in, okay, errors not found out during reviews. Whose review? Review by finance team. So meaning what happens now? You will be understaffed. You will be trying to consider, okay, like to finish up all the other tasks. You will be having already 8 hours work, plus you need to work overtime to fill in for the position of that financial controller role. Because of that, they might miss out on some particular things. So control will not be, that control of identifying that particular thing will not work. So control risk will be coming up. So that is the essence of that particular thing. I think you have understood that particular area. But herein, okay, item might be understated or overstated. Yes, the items in the overall financial statement, the items in this thing, maybe assets, maybe liabilities, maybe anything that is coming in the financial statements might be misstated, because it can be understated, it can be overstated. So we can go for misstatement in this particular case. Clear? Identifying is the key, explaining that particular risk is another thing, and making the particular auditor response over there is also another thing. So don't make a habit like, no, when you discuss internal controls, this will come as a control deficiency also. But in that control deficiency, we'll be discussing about what will be the impact on the business. Here we'll be talking about what will be the impact on the FS. So what will be the impact on the FS figures would be misstated. That would be the case, which will be resulting in which will be resulting in which will be resulting in auditor response different. What is the auditor response? Auditor will need to focus more towards substantive procedures because the control is not operating effectively over there. That would be the response. We'll discuss on the response shortly. So now let's focus on this one. Is your seventh risk. Okay, so we are looking at 7 audit risk. We got 7th one also you got. Now let's read. The question is not ended. No, the question was ended. So let's read the next paragraph. It was recently discovered that a batch of supplier invoices had been miscoded. It was recently discovered that a batch of supplier invoices had been miscoded and therefore had not been recorded as payables. An investigation is still ongoing to identify why the miscoding has occurred. So over to you. Do we see a risk over here? Do we see any risk over here? I would say yes. And what is the risk over here? What is the risk over here? What is the risk over here, guys? Yes. What is the risk over here? Item might be understated. Okay, that is relating to this thing. Anyone? Yes, it is a risk payable understated. Still investigations going on, right? So they have not given you over here whether a correction entry has been posted or not. Since that is not there, we can say maybe the miscoding, due to the miscoding in the system, payable might not be posted. Okay, now when we say there is a payable, it can go into the payable amount in the question as well. Let's look at the table over here. You can see the trade payable has decreased significantly from 2350 to 1400. You can see over here, no? Okay, 2350 to 1400 in the current year forecast. Might be due to that miscoding. So there would be an understatement of that particular thing. And you could see the payable days. What happens with the payable days? Payable days also decreased. It is maybe due to that error only. So there is a misstatement in the particular thing. So now, guys, if you say payable days has decreased, okay, is it an audit risk? Okay, payable days has decreased. Possibility that you are paying that particular thing, you would be paying them on time. So the payable days has decreased because of the error we are having in 8. So that error is the audit risk will be seeing over here. I hope that is like, it is a risk like no payable understated. So what we need to consider over here, miscoding happened, again a control failure happened, miscoding happened. Because of that, we are having this particular thing here, right? Okay, now for the 7th item and for the 8th item, for the 7th and the 8th items, there is a higher chance that people will be writing it down as a control deficiency, writing it down as a control recommendation, because we are used to answering such kind of questions over here, right? So but it is not a control deficiency. It's a control deficiency, yes, but the question is not asking for you for control deficiency. We have to give what is the audit risk coming from this, right? Yes. So we have identified. Now there is a table. So 8 things we have identified. Now there is a table pending. So do we have any other risk? You can get from this particular table? When you assess this particular table, this is your basic analysis skill which can be put to use over here with this particular thing. Okay, any kind of like no unsynced data you are seeing over here? Unsynced data, anything that you can see from this particular screen? Any unsynced data? Yes. Any persons? Okay. Up to you guys. Any persons relating to this? Yeah. Okay. Revenue mere increase. So normal movement. Yes guys, so how do you assess this particular thing? Again, listen very carefully. When you have a revenue that is being increased, you expect that your cost of sales will also increase in line. So you can see, okay, revenue is increasing 17280, 17860. Okay, yes, cost of sales is also increasing. That's fine. That's fine. So normally, if you see the increase percentage, if you work out, it would be almost similar. Almost similar. But but let's look at one point over here. What happened with your operating profit? Sorry, operating expense. What happened with your operating expense? Operating expense has decreased by a significant decrease has been there. So we'll have a significant decrease in operating expenses. Okay, this is very unusual. Do you know why it is unusual? Why it is unusual? Because in operating expenses, majority is the major items are fixed in nature. Major items are major items are fixed cost. Fixed cost meaning even if the sale increases, even if the particular thing like no fixed cost meaning like it will not move with activity. It will not move with activity. It will not move with the activity. So here major items fixed cost, it will not be move with the activity. But here when you see an operating expenses reducing and they have not given anything in the scenario stating like no why it has been reduced, so the only possibility is that your operating expenses is misstated. Maybe something relating to operating expenses is posted inside the cost of sales or any other area, or maybe due to that miscoding we have mentioned over there, you have not recorded the expenses relating to that. Maybe okay, you have not included, you have uh, misstated that particular operating expenses. That is the risk over here. Understood the concept? No. So ideally basically how this will be coming up like no normal movement, operating expenses will not increase that much guys. Operating again, sales is increasing, operating expenses coming down, opposite movement again. So it is like no chance for like no it would be misstated. So there is a chance that there may be, you're talking about maybes. It's not like no it can be happen. We are talking about maybes also. There may be a misstatement in the operating expenses over there, right? So anything else? Anything else? Anything else? Since this operating expenses you are touching on, you can include this particular thing to your operating margin also. And again, the operating margin, you've calculated the ratios, right? You calculated the ratios, yes or no? You've calculated the ratios. You have an operating profit margin which is increasing to 23.57 percentage, which can be linked to that particular thing also, right? So I would say we are not taking it separate. So I'm taking my eighth one as okay, like no decrease or rapid decrease in your operating expenses, okay, combined with, you can combine with okay increase in operating profit margin. Okay, you can include this particular rate. So you have identified this particular thing from this. Okay, but how much you have to answer? How much you have to answer? We need to only enter how many? We need to only enter how many risk? Only 7 risk. So you have that 7 risk over there. So out of the 8 identified, out of the 8 things that have been identified by you, only write the best 7. You will not be given additional marks for writing the 8th one. Okay, the best one you will be having over here. Choose the best 7 where you can answer using the format over here. How you will be answering using the format over here. Clear? Clear? Yes or no? Yes or no? Right? Okay. So what we'll do? What we'll do? relating to this particular question. Now, since we have listed on this particular thing, we'll go to the answer relating to this particular part. We'll take the answer relating to this particular part. We'll go there. We'll try to fill in that particular information. Okay. Since I have taken the screenshot of the questions, I'll not be able to copy paste. But since you have identified, you'll put like no, the first one. What is the first one? First thing you have identified over here is okay. Recommendation made relating in prior year relating to the payroll. You can copy paste that. Okay. So I'm just typing it down, guys, over here. Okay. Payroll deficiencies. Okay. Related recommendations given in the previous year. Given in the previous year is not fully implemented by the management. So this is your identify the risk coming up. Now why that is a risk? Okay. If not fully implemented, okay, there will still be control deficiencies, okay, resulting in payroll figures not properly presented in the financial statements. Or resulting in payroll figures or resulting in not properly, resulting in either payroll fraud also you can send, since the controls are not working, payroll frauds or payroll figures not properly presented in the financial statement. Now what is your impact? Impact on FS is the payroll expenses and related liability might be misstated due to this. Might be misstated due to this. So we have identify that particular thing put in, impact is being put in, and y also being put in. So these three things are needed for you guys. So we need to have these three things in your answer. If you're missing on any of this particular thing, you are going to lose 0.5 marks, meaning like even if you write identify and impact, you will be only getting 0.5. Okay, you're missing on explaining why. So that one full mark will be awarded only if you have these three things together: identify, why, and impact. So why, that is a risk, and the impact on FS. So once you write, you will get that particular thing. Now anyone can suggest what could be your auditor's response relating to this? Anyone can do this? Anyone can give me an auditor's response for this? Chat box. Yes, guys. Anyone can give me the auditor response over here? Yeah. Yes. Yes. Chat box open. Deepak, you are very active. So can you give me this answer, or Tarun? Okay. Or Ridhika? Right. Can you give me like, you think like, no, let's speak out, guys. Let's see like, no, what is your answer? So what would be your auditor's response relating to this? The risk have been given. What is the risk over here? Control risk is there. Control is not working properly. So we're having a control risk. You can state that over here also, guys. So since it is a control related thing, okay, this is a control risk. You can mention that also. This is a control risk. You can say that the control still fails to consider that particular thing. You can include that also over here. You will get marks for that as well, right? So any responses, guys? Any kind of responses you can make relating to this auditor's response? Anything you can make over here relating to this? What could be the auditor response? Now, okay, we will not be able to. So one thing is that, like, no, they have not implemented this particular thing. So auditor's response will be, as we mentioned always, auditor's response will be what? Auditor's response will be what auditors do. What auditors do. Okay. So what auditors do? Audit procedures. So audit procedures. Audit procedures. You have a remember. Anyone remembers audit procedures? Audit procedures. What all audit procedures we are studying? Short form AEIOU. What is AEIOU? Audit procedures. A stands for analytical procedures. Analytical procedures. Okay. E stands for enquiry or confirmation. Physical verification or confirmation. Basically, confirmation. Okay. Right. I stands for inspection. You're inspecting the documents. Inspection. Okay. O stands for observation. O stands for observation. Okay. And U stands for two things. We'll be looking at re-performance, and we'll be having recalculation. So we'll be using this particular thing. So out of these things only, you will be having a particular thing over here. So an experienced audit team should be appointed and increased substantive procedures should be performed. Spot on the run. The second point especially, we need to go for, we cannot rely on the controls over here. So we will be going for that particular thing. Yes, you're spot on that particular thing. Yes. Anything else? Anything else? Discuss the management. Yes, Deepak. Discuss the management about the recommendation of the prior, not prior year auditor, guys. This is not your new client. You are the prior year auditor here. So don't make a mistake of saying, like, no, recommendation of prior auditor. Recommendation relating to the prior year audit we need to consider. Yes. Recommendation relating to the prior year audit we need to consider. So what all things we will be having for this thing over here? Anyone can tell over here? So I'll start with same thing. I'll go with the first point with Deepak, second point with Tarun. Okay. So what is the first point relating to this thing? I'll be making that particular thing. Okay. Discuss or inquire with the management. Discuss is the another term for inquiry. Discuss with the management. Okay. Why the recommendations are not fully implemented. Why the recommendations are not fully implemented and not fully implemented, and what we'll need to consider. Okay, what are their assessment? We mentioned about fraud. No, so what are their assessment about any misstatements or fraud? Okay, or misstatements, or we'll mention specifically payroll fraud resulting from the remaining control deficiencies. You will discuss with that. This is first point. Second thing, okay, we'll go for, you can use an experienced audit team, not really needed, but use an experienced audit team and focus on more substantive testing. Over here. Okay, bear with me with the spelling mistake here and there. Okay, since we are typing in this thing. Okay, that is the thing. So use, what is the answer now? Okay, discuss with the management relating to why the recommendation are not fully implemented and what are their assessment about any misstatements or payroll fraud resulting from the remaining control deficiencies in the system right now. Okay, now use the experienced audit team and focus on, we'll be having, like, no, not focus on, not ficus, we'll be having focus on, yeah guys, we need to focus on more substantive testing or substantive procedures. So this will do it. Now why we'll be having 2 points? So ideally I would have said you to write like 1 point to gain this particular marks. Yeah, perform detailed. So I can consider that also, right, in the Excel. Okay, perform more or more detailed. More, I can add more detailed substantive procedures or substantive testing. Okay, on what? On payroll. Okay, so mention that particular thing, so you'll be getting a 2 mark easily for this. Now if you have written only the first thing also, like discuss with the management this particular thing also, you'll be getting marks. But in order to ensure that, if you have time, try practicing like this. Rather than writing one audit response, try practicing writing two, so that in the exam you will be knowing at least two, so in that at least one you can write. So that is the thing. So perform detailed substantive procedures relating to that. So I believe you have understood how to write this particular thing and how to do this particular thing. So anyone from the chat, can you frame the next answer? Can you frame the next answer? I'll just put the identification part. Okay, so the identification part for the second one is, what is the second one we have identified? Second one we identified as third party warehouse. Inventory is being kept at several third party warehouses. So let's go for the identification part over here. Right, yes, inventories has been kept at several third party warehouses. Okay, that is the identify thing. So why that is a particular risk? Anyone, why that is a particular risk? Okay, there is a chance that we will be missing on what? There will be a chance that we will be missing on recognizing this. No, so due to limited space, this is due to limited space only. So third party inventories has been kept as the reason also they have mentioned. So you copy paste, you can include that also. Due to limited space, okay, that is available here, inventories has been kept at several third party warehouses over there, right? So what would be the particular thing? There is a chance that, as Deepak mentioned during when we have discussed over there is a chance that, okay, inventories kept at third party locations might not be counted. Okay, might not be counted. That is one thing. And not checked for, okay, the not checked for the condition, not checked for the conditions they are as at the year end. Okay, as at the year end. This would be the risk we'll be looking in here. Okay, so normally this would be, so that would be the one particular case. This is one thing. Okay, anything else you can add on relating to this? Anyone? Anything adding? Okay, inventory kept at third party warehouse. This is a risk that, okay, this is a risk that the value of inventory not included in the FS. This may understate the inventory. I agree. This might understate this particular thing. So impact on FS you will consider over here. Okay, right. One more thing, it can increase. Okay, this can further increase the detection risk also, as auditors, auditor may miss out on these locations. So if they are not understanding, no, this would be that detection risk also can come. So impact on FS is no, this could lead to, we'll be going for no, this could lead to what? This could lead to misstatement in, okay, Or let's say, rather than stating misstatement, this could lead to understatement in, or understatement or overstatement. Which one would be the case? Understatement in the inventories, okay, or possible overstatement, possible overstatement in, possible overstatement in what? Possible overstatement in, possible overstatement or understatement, guys? What would be the case? What would be the case here? Possible understatement or possible overstatement? If I'm talking about allowances, if the conditions are not good, okay, so it could be resulting in an understatement of allowance as well. Possible understatement of allowances as well. So we'll consider possible understatement in allowances for slow moving inventories. Very rare chance, slow moving inventories. Okay, so that is the impact we are looking at. So the second one we are looking at, identify this particular thing. So what is the recommendations we can look into? What is the recommendations we can look into? So impact on FS, inventory values might be misstated due to third party involvement. Yes, but if you're writing like that, Shruti, you will not be getting that much marks, because you need to explain little bit more relating to that. Okay, what is that misstatement? What is that third party involvement related in? Okay, we need to say that it might not be counted. We need to say that we might not be able to, as an auditor, we might not be able to look at the condition, we might not be looking to, we might even miss out on counting on that particular thing also, miss out on looking at the condition also. So that we need to give, then only you'll be getting that mark. So framing is the key over here to gain the marks over here. Even if you miss on this particular allowance related thing also, the other thing, third party counting, if you give, you will get marks for that. Now what could be the recommendation relating to this? Audit response, Deepak is saying the audit team should discuss the matter with the management and get permission from the third party. The team should attend the count at the third party. No, Deepak, you are right but wrong. You are right but wrong. Why it is right? Why it is wrong? I'll come to this particular point on. So audit response over here, like, no, what you need to do over here is, you are right. The audit team should discuss with the matter with the management, and and the management should make ready for the arrangement, not the auditor. Okay, management should make the ready for the announcement. So you will not be asking, you will not be getting permission. Okay, so discuss with the management to make an arrangement with the third party for the count for any material thing. So there are two things to look at over here. Okay, point number one. Okay, for any material, okay, inventories held, material inventories held at a third party location, for any material inventories held at a third party location. Okay, discuss with the management and arrange an inventory count to be done. Okay, at, or arrange an inventory count to be arrange an inventory count to be not done, inventory count to be attended by the auditor, for any material things. Now if it is not material, for immaterial items, for immaterial inventory, but still it is inventory now, for immaterial inventories, okay, get a third party confirmation on the quantity and item, or item wise quantity, or say we would go for item wise quantity they hold as at the year end. So this would be the thing you will be going with. So this is how you will be framing the answers over here. Clear? This is how it would be framing your answers responses. So likewise, we will be framing the answers for the rest of the things. So I would have like no, we can go on framing this particular answer, but I'll be sharing this Excel with you guys so that you can practice on. Okay, so consideration should not be given to the information for third. Okay, consideration should be given to get information for the third party's auditor. Can you explain a little bit on Tarun over there? So let's say that a third party auditor would have done an inventory count over there. So you can get a talk with that third party auditor and get a particular thing if you can rely on their work. Yes, that is also good only, right? Yes. So I hope you guys have understood how to frame this particular answer. We'll go for one more. We'll go for one more, and rest of the things I'll give you for framing. Okay. The file will be shared with you here itself, so you can use this particular thing to go through this particular topics, whatever topics we have covered, how to frame this particular thing with the notes, annotations I have made over there. You can refer to that particular thing. You can understand that particular concepts. So that's why how will be looking, how will be doing this particular thing. Let's do for one more thing. Okay, the third one we'll consider. What is the third one we have identified over here? Third risk. Third is we have identified over here is cost of upgrade and repairs. Cost of upgrade and repair. So we can specifically add this particular figures also to understand over here. Okay, 120,000 and 30,000 we have mentioned. Okay, so copy pasting this thing, since why I'm not copy pasting right now is from that thing I cannot copy paste right now. It's a screenshot only, so that's why. So we'll like no for as part of okay, there is an exchange. Okay, we have mentioned as part of something, no, as part of the renovation, I think, as part of for this upgrade. As part of this upgrade, survival solution company exchange a large item of plant. As part of this particular upgrade, survival company has gone for this large grade of this particular thing over there. So that is the case. So we'll consider this thing as part of the upgrade of the factory. They have exchanged a particular large item. So coming down to this particular thing and drafted that way, right? As part of upgrade of factory, okay, company exchanged an old plant for a new asset and recorded the asset at the amount of cash settlement. Okay, so meaning like, no, what is being cash paid or cash settlement, you are putting that only, but when you copy paste you will get that figures over here. Now why that is a particular risk? Anyone? Why that is a particular risk? We already explained over there. Okay, there is a this is exchange, the fourth one I have identified. Yes, so why this is the particular thing? Okay, there is a okay, as per IAS 16, if you know that, as per IAS 16, property plant equipment, PPE, property plant equipment, the asset cost to be recognized on an exchange is equal to, or should be equal to the fair value of new asset, fair value of new asset that is being purchased, so we will be considering that particular thing only. Okay, so what they have done, but the company has only recorded the cash amount of 30,000. You can consider 30,000. Okay, excess of 120,000. Okay, 120,000 fair value of new asset, or we'll consider like no 120,000 fair value of new asset. Okay, minus exchange value of old asset. That is how much? Exchange value of old asset is 80. I think 90,000 is a fair value. So 90,000 fair value, exchange value of old asset. So that is only being recorded. So what would be the impact of FS? This would result in under statement of, okay, property, plant and equipment, okay, and again under statement of related depreciation expense. Related depreciation expense. Okay, so this is that particular thing. So you got this identity, you got this y, you got that impact over here. So this is the thing over here. So you got that framing thing, identify y and impact on FS has been taken over here. So now what is the recommendation? Anyone from the chat? What is the recommendations? What is the recommendation? How we can make a recommendation relating to this? Yes? How will recommend? What are the recommendations, guys? Anyone? Anyone? Deepak, I'm waiting for you here again. Yes? What are the recommendations we'll be considering over here? Yeah? One thing, you need to understand what is the management treatment. Yes? Second thing, what you need to consider, you need to ensure that that 120,000 that is given, recalculation, yes, recalculation could be that particular thing. You need to understand that 120,000 they are saying fair value of new asset is correct or not. That also you need to consider. Okay? And we need to go for the accounting entry relating to this also you can consider. There are three things which we can go. So let's start with one. Okay? Let's start with one. Point number one. Okay? Discuss with the management, okay, about how they are accounting for, or what is their accounting treatment for. I'm just mentioning how they are accounting for the exchange of an asset as per their accounting policies, and okay, investigate any discrepancies with the requirement of standard. Discrepancies with the requirement of standard, or with a required treatment, either than requirement of standard with the required treatment. Okay. Second thing, they are telling like no 120,000 is the fair value. You can go for obtain the invoice for the, okay, purchase of new asset, and verify the dollar 120,000 fair value, the purchase value over there. Okay. And the third thing you can include over here would be, okay, since we are exchanging this thing, no, like we are de-recognizing one asset and we are going to re-recognize a particular thing. So for the de-recognition, there will be a gain or loss. There will be other accounting entries. Okay. So the entries that you are posting relating to that also you need to consider. You can put it over here for additional score. Okay. Additional score in the sense, if you miss on the first two, you will get this thing. Okay. Regarding the de-recognition and de-recognition of old asset, okay, and recognition of new asset, regarding the de-recognition of old asset and recognition of the new asset, review the accounting entries posted and ensure, or and review, and you can so no and recalculate. You can also do the recalculation of, and do recalculate the gain or loss on derecognition. It will be there, sometimes they'll be there, sometimes they'll be there. So this much you can go. You don't have to write this much, guys. This is a maximum you can write. Any one or any two you can write, you will get that full marks relating to this. So this is relating to that audit risk thing. So I hope you guys have understood. I hope you guys have understood how to frame this particular answer, how to discuss like no. And again, guys, when you are framing the answer, now I am putting like identify why and impact on FS over here. So the identify why and impact on FS, you will not be writing in the real exam, but what you need, like no, I need you guys to write like no table, meaning like paragraphs. One paragraph for identification, one paragraph for why, one paragraph for impacts. Don't mix it in, because if you mix it in together, what happens is that you will forget to put either impact or this thing. So always keep three short paragraphs to explain this particular thing, and always keep one procedure, one small paragraph inside the auditor response. And that auditor response you can write maximum of two. Don't write for more than two, maximum of two. So if it is one also fine, but for a better chance, write at two over there, right? That is the thing. So rest of the risk in this thing we have already identified. You guys can practice with this particular question on by like no putting the answer over there. Okay, I'll share this file with you in the chat itself. Okay, let me see over here, one moment. Okay, I'll share that in the chat itself, right? So it's a poll only, right? Okay, so I'll share with you. We will share this file in the community group, so not a problem over here. So did you find this particular thing? Okay, any further like no any further thing we can have like no the questions, any other risk, any other area you need explanation on, guys? In your other area, audit risk. So this is towards the end Q&A section. 5 minutes we'll take. Any questions you have, you can put it on the chat box relating to audit risk. Relating to other areas, we will discuss when we are having the next session. So yes, if you have any questions, please post on the comment box. Relating to audit risk, is there any other questions? So this is how you actually frame this. You're actually framing this on the basis of any other questions. I'll take up for you. Right. So okay, how do you find this? Okay, did you find this helpful? Just putting a session over here. Okay, just a poll, so you can just give your thing. Okay, right. So a poll has been added over there. So right, did you find the session helpful? You can put it over there like yes. So any suggestions you can make on over here. Like I would require you guys to put that poll also, so that anything, any suggestions, any you can make on the comments also, or any risk, any areas you want me to further discuss, we can have it over here as well. Yes, guys. Questions if you have, shoot please in the chat box. Right. Yes, Deepak. Okay, always in for all of you. So okay, I usually do this particular thing with SOE Global students. We'll be having like no Zoho meeting. We'll be having the sessions over there. Okay, we'll be discussing on questions. We'll be discussing about their doubts. Okay. Yes. So we'll take on questions if you have anything like right. Thanks, Srihari. Right. Yes. Any other points? Okay. So right. So we at SOE Global, we will be doing this particular, likewise, if it is not a YouTube live for Crash Series, we'll be doing with the existing students with this. We'll be discussing questions, we'll be having past paper question factors, we'll be having mock exams also over here. Okay. Now guys, over here, this is only the first day of the Crash Series. We have still 4 days left. Okay. Next session will be on internal controls. So we'll be not focusing more onto the concept side, will be on the practical side of how to frame your answers for the internal controls over there. Okay, so internal controls will be considering over here, right? Yes. So internal controls will be focusing on the second stream, that will be happening on the same time. We'll be having at like 8 to 10 for Sunday also. Okay, so on 22nd on internal controls, we'll discuss on that particular area. Yes. right? So I hope this was very helpful for you. Okay, please turn on your notifications. Please turn on your notifications for any live sessions, future live sessions that will be having from SOE Global over here, right? Yes, so please give the share. Please share this particular thing to your friends, whoever is attempting AA in March, whoever will be planning on for any like no session in like June also, in future also, or anyone who needs to get a taste of audit relating to this particular thing. You guys can like share with your friends, share with your colleagues. Okay, make them helpful also. And this live will be available in the SOE Global YouTube channel, so you can come back and refer to anyone who missed on the initial area. This will be available in the channel as well. Okay, so thank you guys. I also really enjoyed chatting with you, giving you this particular things. Okay, so rest of the things like no, I have given you the framing thing, so you can work on that particular thing relating to auditors. See you in the next live session with internal control techniques. Okay, bye guys. Okay, I'll wait for 1 more minute for any other questions, or else we will just end the live stream. Yes. Yes, thank you, Shruti. Thank you, Hari. And thank you, Deepak. And thank you for other people who have come in with the live chats. So I'm waiting for 1 more minute. And after 1 more minute, we'll be ending the stream. Yes. And hoping to see you for the next stream as well, which will be happening at 8 o'clock tomorrow, Sunday. Yes. Bye, guys. Yes. So thank you guys. Assuming that no questions, let's end the stream. Okay. See you. Good night. Okay. We'll see you in the next stream. Bye.